Rita, a single mother, wants a good future for her children. She knows that education will help achieve that, so she pays additional contributions to FNPF to save up for tertiary education fees. Apete works in Suva and supports his parents in the village. He wishes to build his own home, so he pays additional contributions to help him achieve this dream. FNPF's additional contributions helps you invest in short-term goals while saving for retirement. Contribute more, grow your savings, and achieve your goals. FNPF, securing your future.
Retirement. We'll all get there one day. With FNPF's new retirement product, the Drawdown Account, you can plan for an enjoyable and sustainable retirement. The Drawdown Account is a tax-free investment, and account holders receive a monthly income, one partial withdrawal a year, receive interest at the end of the financial year, amongst other benefits. For more information, log on to our website www.myfnpf.com.fj. FNPF, securing your future.
Presenting My FNPF app, granting you seamless entry to your FNPF account from any location at any time. With important information and services delivery right at the tip of your fingers, managing your retirement funds has never been more convenient. Check your account balances, make additional contributions, view withdrawal history, and monitor your employees' contributions all in one place. You can even pay voluntary or additional contributions via M-Paisa, BSP EasyCard, Visa or MasterCard. You can also apply for withdrawal on the mobile app for education, unemployment, advice of death and funeral assistance. You can even register a minor above 6 years old or become a volunteer member effortlessly through our user-friendly interface. Acquire account statements and stay informed about every aspect of your retirement funds. My FNPF app. Your fund, your future at your fingertip. Download it today on Google Play Store or Apple App Store.
Bulavinaka, ladies and gentlemen. Welcome to the Fiji National Provident Fund Annual Member Forum. A warm welcome also to those of you joining us on our social media platforms on the FNPF Facebook and YouTube pages. My name is Timothy Ravutu and I will be your MC this afternoon. The Member Forum is an annual event directly with our members, pensioners, employers, and interested stakeholders. A quick look at today's program. There are two main parts. First up is the main presentation to be delivered by the FNPF Chief Executive Officer, Mr. Viliame Vondonaivalu. Following that is the question and answer session, which will be an hour long. At the end of the forum, we have our teams providing FNPF services. Just some housekeeping matters. I hope you have all registered with our teams and you have received your information pack. Inside your pack, you will find the annual report summary, newsletters, and feedback forms. You will need to complete the feedback form in order to collect your refreshments and merchandise. The washrooms are just outside to the right of the main entrance. Please be mindful when moving around because we are live streaming this event. We also ask you to please switch your mobile phones to silent or vibrate mode for the duration of the program. Just before I invite the CEO, we will open our forum with a word of prayer. Let's pray. Our Father in heaven, we bow our heads before you this afternoon as we gather for our member forum here in Labasa. We thank you for bringing us together in unity and purpose. We seek your wisdom and your guidance as we engage in discussions for the benefit of our members, pensioners, and employers. Please bless us with clarity and understanding. May this forum serve as a platform for progress and transparency. Please also grant us the wisdom to make sound decisions that will benefit our members now and for generations to come. We ask your presence to be with us throughout this program. Please forgive us for our shortcomings. We leave our program under your divine direction, and this prayer we offer in the name of our Son, our King and Savior, Jesus Christ. Amen. Thank you, ladies and gentlemen. I will now invite the CEO to deliver his presentation.
Nimbulabinaka FNPF members, pensioners and employers. Thank you for being here today, and it's my pleasure to welcome you all on behalf of the FNPF board, management and staff. To those of you who are joining us through Facebook and YouTube, Bula Sia, and welcome to the Members Forum at the Labasa Civic Center. I'm humble and grateful for the opportunity to present our annual report. This is a legislated event that we are required to hold every year to share our performance and achievement for the preceding financial year as well as our plan for the future. Over the next few minutes, I will go over our performance, highlight and how it benefits our members. This slide shows our financial achievement in a nutshell. Our total assets have increased by 900 million to 10.6 billion at the end of June 2024. Members' fund made up of 8.1 billion, which is 12.5% increase year over year, partly driven by members' contribution collection. The general reserve of 2.1 billion comprises of the solvency reserve, which we are legally required to maintain, and include an investment reserve. we had a net income of 882.1 million, up from 775.8 million in 2023. After we deduct our expenses from the net income, we are left with 819.4 million, and this is the net increase in net asset. From this amount, we are able to determine the credit interest rate and amount to be paid to our members. We've collected a total of 779.8 million in contribution, an increase of 238 million from 541.5 collected in 2023. The increase in contribution is linked to more members making additional and voluntary contribution. This is an important slide. Information for members and pensioners to be aware of. Prior to the reform, FNPF business was operating under one fund, meaning that member saving, annuity payments, and the special death benefit were all in one fund. This was identified as one of the main factors contributing to the unsustainability of FNPF because of all the funds, as I've just mentioned, were lumped together in one fund. One of the outcomes of the reform was the separation of the fund or businesses, which is what you see today. We now have 3 funds which cater for specific businesses. The FNPF fund, this fund belongs to the current members and it's invested heavily in growth asset for the purpose of accumulating and growing for members' retirement. SDB and the retirement fund, the purpose of this fund is to meet its liability, which are annuity payments and claims. Investments are made in government bonds and cash equivalent, which, in other words, risk-free investment. The asset profile for each of the funds represent the risk and return profile guided by the fund investment policy statement. The FNPF fund, which is the second bucket from this right, represent an asset profile with a mix of defensive and growth asset for the purpose of accumulating and growing members' fund for retirement. The risk return profile for this fund ensures that we continue to provide competitive crediting interest rate to members and the DDA account holders. SDB funds and the retirement fund, these are the third and last bucket to the right of the slide. The purpose of this fund is to meet its liability, which are annuity payment and claims. Investments are made heavily in defensive asset, in government bond and cash equivalent, or as I've referred to before, risk-free investment. The return from this investment ensure a guaranteed funding for monthly pension payment and special death benefit as they fall due. The investment portfolio grew from 9.4 billion in 2023 to close at 10.6 billion in 2024. Our broad investment objective is to maximize long-term return subject to constraint aimed at containing the fluctuation in return over a short-term period to ensure an appropriate balance between risk and return. We expanded our investment into resilient sectors capable of withstanding economic challenges. Our total investment portfolio is made up of fixed income, equity, commercial lending, properties, cash, and term deposit. I will now go through the achievement of our investment portfolio. Under the fixed income, we have government security, which closed the year at 4.3 billion. The upward shift was due to higher investment and low maturity. Our investment in government security closed at 5 million. A decline here was due to the floating by a government institution, a low floating by a government institution. most statutory bodies were able to source cheaper short-term funding from commercial banks due to high liquidity and low interest rate environment. Our total equity portfolio was 3.4 billion, with the local equity making up 2.6 billion. The local equity portfolio grew by 13%. This growth was primarily driven by additional capital investment, dividend reinvestment, new acquisition, and changes in the fair value of investee companies, which was driven by their strong financial performance. Significant investments were made in HFC Bank, Healthcare Fiji Limited, while dividends were reinvested for Police Global Limited, Fijian Holding Unit Trust, and Unit Trust of Fiji. A significant acquisition was the 40% stake we acquired in Future Farm Limited, trading as Rooster Poultry. We acquired these shares from BSP Life, which fully owned the Future Farm Limited. This is another resilient sector that withstanding economic challenges. Net income increased to 882.1 million and reflect an 8.52% return in investment. I reiterate that we are dedicated to generating robust return and fostering significant financial growth. Our strategic investments and diverse portfolio are designed to maximize value, demonstrating an unwavering commitment in enhancing the financial well-being and security of our members. The investment income is linked to the amount of interest that we're able to credit to our members saving in a financial year. I mentioned earlier in my presentation that from our net income, we've deducted expenses, which then leave us with a net increase in net assets. This helps us determine the credit interest rate to members. Over the past 6 years, we have paid members 2.3 billion in interest. You will note that the credit interest rate dipped in the financial year 2020 because of the COVID-19 pandemic. From 2022, 23, and in 2024, the credit interest rate have increased steadily, which reflects the strength of our investment and the return earned. Our cash holding was valued at 847 million, up from 640 million in 2023. This increase is attributed to two key factors: the reinvestment of the contribution rate of 18%, which has significantly boosted the amount of fund being allocated, a marked rise in investment activity. The higher contribution rate has led to a greater capital inflow, while the increase in investment activity has enhanced the fund's overall performance and growth. And the investment policy statement objectives, or what is referred to in short as IPS, projects a benchmark for growth asset at 60% and a defensive asset at 40%. Investment universe in Fiji is limited, and growth investment are attractive also. 90% of our investment are placed in Fiji. However, the fund face constrained investing offshore. In terms of our offshore equity, we are now the second largest shareholder in BSP PNG with more than 49 million shares. Our commercial lending portfolio closed the year at 1.2 billion, reflecting a growth of 4.1%. Total income for the year was 65.3 million compared to 61.3 million last year. The property portfolio value increased by 29.4% and closed the year at 602.4 million. We have three major property acquisitions. the Garden City complex in Rewai, the warehouse facility at the Kalambu tax-free zone, and the Natandola Beach Villa. Several of our recent investments, such as the acquisition of shares in Future Farm, trading as Rooster Chicken, and Fletcher Higgins of Fletcher Construction, reflects our forward-looking strategy. The Grand Pacific Hotel mock-up room refurbishment is underway with the contractors and the FF in supplies appointment. Project managers for the refurbishment is in tender process, and the full refurbishment to resume in this financial year. Refurbishment at the Westin Fiji Resort commenced in January of 2023, focusing on guest room, central facilities, and the backhouse redesign. The practical completion is targeted for August this financial year, which is 2025. As a custodian of members' fund, we have in place governance and compliance framework which are continually aligned to regulatory and industry standards. We have regular assessment to ensure we meet the standard I've just mentioned. We have regular input from our stakeholders to ensure our policy are practical and effective. Equally important is how we are able to adapt to changes in regulation, industry, and the members' need. Our board plays a crucial role in shaping the strategic direction of the fund and ensuring the integrity of FNPF governance framework. The Minister of Economy oversees the appointment of all our board directors, as outlined in Section 7 of the FNPF Act of 2011. It is also important to note that the FNPF Act was amended to have a better representation of key stakeholders in the board. This means that the fund board will have a representative for employers and employees. These appointments are subject to successful fit and proper assessment conducted by the Reserve Bank of Fiji. There are 4 board subcommittees. Their role is to assist the board in decision making. Members of the subboard are appointed based on their technical skills. Under the FNPF Act, the Reserve Bank are our regulatory prudential supervisor. The fund actually signs off on all solvency and financial condition report. We are audited externally, and we are required to table the annual report to Panimal annually. Communicate performance of our fund to members annually, which is what we are having here today on the annual members forum. There are 6 non-executive board directors. Board chair, Mr. Patel, was appointed as a director and chairman on the 1st of January of 2024. A chartered accountant, Mrs. Susi Wanganibaravi, was appointed as a board director on the 1st of March of 2024. She replaced Mr. Mukta Ali, whose term had ended. Our operations team is made up of our member services and contribution, collection, and compliance team. These functions are very important because they are responsible for delivering our product and services to our members, and they collect members' contribution and ensure employers comply with their responsibilities. A net contribution of 323.2 million was recorded, with a total contribution of 779.8 million against a total withdrawal of 456.6 million. There was a 106 increase in additional contribution to 81 million and a 83% rise in voluntary contribution to 27.4 million. Benefit covers all pre-retirement and full withdrawal. Under the pre-retirement withdrawals, we paid out 222.8 million, while full withdrawal total 333.8 million. It must be noted that the benefit payment of 474.2 million includes payment for drawdown accounts and the purchase of annuity or our retirement product. Our membership numbers increased by 17,279 to 423,144, a 62.5% contributing compulsory and voluntary members. A gender gap is still evident, with a woman making up 42% of our contributing voluntary members. Our pensioners total 7,849. Over the last financial year, we recorded 9,176 active employers compared to 8,467 in 2023. Active employers are those who paid their employees' contribution at least once during their financial year. A total of 902 new employers were registered compared to 890 in 2023. Our pensioners total 7,849. Over the last financial year, we recorded 9,176 active employers compared to 8,467 in 2023. The policy changes to our early withdrawal grounds resulted in an extension of our education assistance to include global recognized courses allowing members to purchase laptops. Other policy changes made were for the unemployment assistance, which resulted in the stand-down period being revised. Medical assistance, the incidental expense for those members who have medical insurance cover. We've signed a memorandum of understanding with the Taukelan Trust Board to facilitate members' native lease application for housing withdrawal. We've opened the pension center at my FNPF center in Nandi in April of 2024. We've closed off the financial year and we have declared an 8% credit interest rate, which is 572.4 million paid to our members. Feedback is an important part of our operation, and we strive to engage with our stakeholders to enhance our service. Our latest customer survey shows a marked improvement in member satisfaction. While this is an achievement, there's still room to leverage our technology not only to improve service delivery, but also to transform our business processes. There were more than 10,000 customer survey respondents. We've achieved a satisfaction index of 4.1 out of 5%, which is a higher than international benchmark. This rating is positive to us because it tells us that our members trust and have confidence in the fund. It also reflects our members-centric focus. Following the survey conducted last year, we embarked on a rebranding campaign. We will be launching this campaign over the next few weeks. Our advocacy sessions have enhanced our members' understanding of retirement saving through awareness session and community visit throughout the year. By collaborating closely with employers, we have offered retirement literacy awareness session, equipping them to support their employees' knowledge for retirement saving. This initiative led to a significant increase in additional contribution from members. We've extended our outreach session to various centers around Vitilevu, as well as Koro, Levuka, and Tavioni. Our team also visited members working in the seasonal working program in New Zealand as well as Fijian in the United States. We've made considerable strides in our digital transformation, impacting various aspects of operation, processes, and strategies. These initiatives are designed to significantly improve the value we provide to our customers. The MyFNPF app was enhanced to include two-way communication through messaging, and members could submit application for local, medical, or funeral assistance. The employer self-service portal was enhanced with more than 98% of employers registered on the portal, now actively using the platform to submit monthly contribution and manage service inquiries. Our live chat feature on the portal have enhanced communication efficiencies. Our plan are aligned to our 5-year strategic plan, and as we enter the 30 years of the implementation, we have significant plans to enhance our service to our member, with the primary goal of ensuring financial sustainability in retirement. While immediate result may not be feasible, we are focused on our long-term success. We will continue to pursue opportunity in our growth strategy to maximize investment and return to our member. We have also working closely with our regulators, the Central Bank of Fiji, to extend our offshore dealings to enable more diversified investment approach. Over the next 3 years, we will undertake major initiative to review our scheme design and determine the optimum operating model for FNPF, ensuring that the best financial outcome for our members. An integral part of our plan is to review our scheme design and governing legislation. We have reaffirmed our core purpose, and we push through the changes that we need to improve operation effectiveness. To conclude, our achievement would not have been possible without our Heavenly Father's grace and faithfulness. And with all things, it is through the guidance of the Almighty that we're able to reap the reward. I'm grateful for the guidance of the chairman, the directors of FNPF board, who have supported, have been invaluable in shaping the fund's direction. I commended the dedication of the FNPF management team and staff, whose commitments and hard work is reflected in the fund accomplishment. So on behalf of the FNPF board, management and staff, I thank the members, the employer, and other stakeholders for your ongoing support, and we look forward to the years ahead. Thank you for taking the time to attend the forum, and my team and I are looking forward to answering any questions that you have. Inaka.
Thank you, Mr. Vondonaivalu. Ladies and gentlemen, we will now go into the question and answer session. Please note that this session is 1 hour. We have included some common question and answers in your information packs. This is relating to our operations, investments, as well as our pension reforms. We'd appreciate if you please refer to the information we have provided to ensure we make full use of the time set aside for question and answers. I will now invite our panel to please make your way to the front and join our CEO. Thank you. While our panelists are finding their seats, ladies and gentlemen, if you have a question, please raise your hand and we will bring a microphone to you. Please identify yourself before asking the question. If you're a member, an employer, or a pensioner, for those of you joining us online, you can ask your questions in the comments section on Facebook and YouTube. Questions can also be sent via SMS or text to 9985 368. That number again is 9985 368. Thank you. I will now introduce our panel for this afternoon. On my left is our General Manager, Member Services, Mr. Alipate Wangai Rawai. And beside him is our Chief Investment Officer, Mr. Naimbuka Saune. Our CEO, Mr. Williame Vontonaivalu. We also have our Chief Finance Officer, Mr. Tevita Lomalangi, and our General Manager, Business Development Strategy, Ms. Millie Low. Thank you, ladies and gentlemen. The panel is ready, and the floor is now open for your questions. We have a question in the back.
Bula Tawake, I'm a member. My question this afternoon is most of the contributing members of FNPF are probably workers, and having the forum between 1 and 3 is not very compatible with the working people because of their lunch hour. Usually, I know it used to be on Saturdays. Since last year, I think it's been held during the weekday. My question is, why the change of day? Instead of having it on a Saturday, like you usually used to do, why on a Wednesday where it sort of gives the working people a little way less time to be here than if it had been on a Saturday? Thank you.
Thank you for that question. So we used to have the forum in Labasa on Saturdays, and at that time we got feedback back from the members that they prefer to have it a weekday because most of them don't live in the city, in around the town area, and when they go out on Friday, they don't intend to return on Saturdays. But your point, and we'll review our numbers to see whether we need to go Saturday sessions. Naka.
Thank you. We have a question in the front.
I'm Selina Liwa, a pensioner. I just want, on behalf of the pensioners who were disadvantaged in the chopping of our pension amount, I would like to thank the Fiji National Provident Fund executive in listening to our cry of being unfairly treated for the past 12 years. On retirement, we had signed an agreement with FNPF to be getting a fixed pension amount whereby we had calculated it to cater for our bills, food, and medical expenses as we had become unemployed and aged. However, when the amount was chopped, we had to try and squash our expenses to fit the limited amount. However, the situation was, we, the lucky ones who are still living from the 12 years of being disadvantaged, would like to thank you for giving us back what was rightfully ours. To be honest, from 2012 to 2024, I had lost trust on FNPF because it did not honor its agreement with its members as in the pension funds. Anyway, I thank you once again for the reinstating our amount. I just have a question. Since we are getting the difference of our pension amount from social welfare, are we also entitled to benefit given by the social welfare department, like free dental clinic, funeral assistance, insurance, etc. Pinaka.
For that question. On the social, normally, pension is means tested. That means that if you are an FNPF pensioner, normally social welfare leaves you out of the assistance they provide. But I understand social welfare has its own rules over who can or cannot receive the benefits that they provide, which is government funded. And their criteria is something that the government decides. FNPF does not have any say in who is entitled to the benefits that social welfare provides. But I can confirm that it is means tested. In that sense, it means if you are an FNPF pensioner, most of the time you are left out of the benefits that government provides under the social welfare scheme.
I'll try to answer your your question in regards to our ability to sustain. So you refer to that presentation that so before, as we've stated, the fund there was only one fund. So when that promise was given to you as one of the member, you were funded from this place, the second column. People who are still working. So there were a number of tests that were done by World Bank and other institutions who said that was an unfair process because you were feeding from the members, the other members. Because the rate that was set then was 25%. That's within 4 years, you would recover your own money. But that was from that one, the 423 members. So what actually happened, that fund was divided into three pools. That is one, the FNPF fund, which is a bigger piece of the pie. Members, retirement members are only 7,000. So when we do that, then you need to be funded from your own pool, which we can't sustain that. That's why it went back to that we didn't go with the contractual amount that you have, but we've gone to the other rate that was given to the pensions. But the change in law was done by government, not by FNPF.
Yes, because the change was legislated as a law, which is done by government.
Thank you, ladies and gentlemen. Very good questions. Any more questions from the floor?
Yeah. I would just refer Mrs. Watt to the package that we have given out. We've answered comprehensively the questions related to your pensions, and would ask you to go through that frequently asked questions on the pension questions.
Thank you. We are also receiving questions online. We have a question for the panel. Can FNPF allow members who are over 50 years but not yet 55 and have balance lower than 10,000 to withdraw their funds, especially if they are unemployed? This is a question received online.
Currently that's allowed if you have it's called the low balances withdrawal. If your balance is 10,000 and less, and you are 50 years old, and you have been unemployed for 1 year, you can come to the fund and do a full withdrawal. Let me repeat that again. The question that's being asked, if your balance is $10,000 and less, if you are 50 years and under, if you have been unemployed for 1 year, your balance is $10,000 and less, you can fully withdraw your fund to start a business or for any equity. That's currently uh, being allowed at the moment under the small account withdrawal. Vinak.
Thank you. Any more questions from the floor?
You can ask your questions in the vernacular. You can ask it in Fijian or in Hindu, and then we will get people to translate that for you. Feel free to ask any questions. Please ask your questions now, not after we leave, then you ask questions amongst yourself. Whilst we here, ask the question so that you can hear directly from the panel that's seated here. Vinak.
Oh, I'm Mukesh Chan. My question, sir, like a person is retired, he's 55 above. He can be a volunteer member?
That's a good question. 55 years is the entitlement age where members are allowed to make an option when you are 55. You either can make the option of full withdrawal or you opt for a pension. If you've got enough money, you can fully withdraw a portion. You can do a joint pension. You can do a sole pension, or you can even opt for a drawdown product or a term annuity. So the choice is entirely yours. But your question is relating to 55. If you make the option to withdraw at 55, but you are currently employed, you will be re-employed, which means that you are a compulsory member. Only then you are allowed to re-enter once. Okay? For example, if you are currently working, you're 55, you're working for Labasa Town Council. 55, they've extended your contract for 2 years. You can take your money out, make your option at 55, but you can re-enter and become a compulsory again. But you can't re-enter as a voluntary member. A voluntary member, the age that you can, the highest age or the ceiling that you can enter is 54 years. Okay? I hope I've clarified your question. Is that clear, sir? Thank you.
If I may add to that, sir, this is a question that has been asked to us in several forums, and FNPF is currently in discussions with government to look at ways in which we can accommodate your request, that those that are over 55 to rejoin as voluntary members. And this is currently in discussion stage with government. Nak.
May I also add, you don't have to make option at 55. Okay, for those of us that are working, previously you had to make your decision at 55. But if you continue to work or you have an alternative source of income, you don't have to make your options at 55. You can make your option at 56 or 57 or 58 or 59 at 60. But the entitlement age is 55. Okay? I thought I'd just clarify that further. Enough.
Good afternoon, sir and madam. I have a question. When I turned 55, I actually, when I retire, I withdrew partial. Okay, that goes on to my pension. But I continue because I was working until I turned 70. Okay, my question is when I went and asked whatever I have got, and then I actually wanted to withdraw part of it, and they said I can only withdraw 2,000 for building fund. But my question is, 2,000 for building fund is not enough. That was what I was told, because I continue from 55 to 70, where I have another, okay, how much I've got over there. So when I actually want to repair my house, I actually went and then asked if I can withdraw part of it, but I was told that I'm only entitled for 2,000. But repairing for a house is 2,000 is not enough. I'm just requesting if you can actually increase that 2,000 to something else, because 2,000 is not enough for repairing a house or even building a house. Thank you.
Thank you for that question. Under our housing pre-retirement withdrawals, you can carry out minor repairs depending on the amount that you have in your general account. So if you look at the screens now, each member, this money is divided into two portions. One is a general account which contains 30%, and one is 70%, which is preserved for retirement. For any withdrawals under medical, education, or housing, you can only take it from the 30% from the general account. So it depends on the balance that you have on your general account. So I'm assuming that, hopefully I'm correct, that when you came to the funds to ask for some small repairs, that would be the balances in your general account. Because the other balance, the bulk of your balances, would have been kept at your preserved account. So that is probably the explanation for why you were limited to 2,000, because it depends on the amount that you have in your general account. And we've did these changes for a very good reason. When we looked at the FNPF and what was the purpose, why we started FNPF, FNPF was basically savings people's monies for retirement. And we have never deviated from that purpose. That remains. But however, FNPF was established in 1966. When we actually reviewed the balances that members had in FNPF, we were very alarmed at the balances that members had in their accounts. Even though FNPF was established in 1966, when we dissected what members had in their balances, the bulk of them had $5,000 and less. And we went in to investigate what was the root cause of these low member balances. We found out that members were allowed, whilst they were still working, to withdraw 2/3 of their money. So they could take away 66% of their money. And there were 23 grounds of withdrawals. You name it, puja, burial, tevu, kaune mateningon, and all this. People were rushing to the fund. But that was not the purpose of the fund. And there were 23 grounds of withdrawals. That's why members had low balances, not through their own fault, but because of the policies that were allowed then. It allowed members to have access to their balances. So when we did the reforms, we changed the preservation policy. Now 70% is preserved for your retirement. 30% you can have access to that for any of the 5 approved grounds of withdrawals, which is medical, education, housing, funeral, employment, and natural disaster. You could have access to 30%. The only time that you can dip into your preserved account for the first time is when you want to buy a property or housing. You can then access 30% of the 70%, which is another 21%. So those of you that come to the fund and ask for their housing eligibility statements would have the 30% of the 70% is 21% plus the 30% in your general account. That's 51%, which is your housing eligibility that's shown in your interim statement. So, and we've seen the impacts of the growth in the preserved account because we already seeing the benefits in more members are accumulating monies in the preserved account that's accumulating their balances faster. Nak.
Thank you. Any more questions from the floor?
We probably can talk to you separately if you're still not happy with the. Okay, Mini. Nak.
Thank you. We have a question here at the front.
Thank you. Just a question. We were deducted from 2012 to 2024. In those years, will we be getting any refund from that or gone forever? I mean, that's from Provident Fund, not talking about the new one that social welfare is coming. But from 2012 to 2024, it was Provident Fund that cut it out. Will we be getting something back? That's all what I want to know.
Thanks for that question. And in the spirit that now that you've asked the question, the FNPF has made its assessment, and we have, based on the evidence that we have, based on the legal advice that we've got, and we have made our advice known to government. The portion that you are now receiving is paid by the government. If government wants to pay, then they will have to pay. But in as far as FNPF is concerned, we've made our decision in terms of where we are, in terms of what we are allowed to do under the current law.
Thank you. We have a question online, received online. Question in regards to FNPF setting up overseas. Is there any progress on this? And which country is the fund planning to set up offshore?
In fact, we've already invested overseas. So yeah, on the setup, we've made a number of review for the possibility for us. There's some restriction in law that would allow us to, because you'll be treated like a super fund in those jurisdictions, and you have to go through a lot of regulatory requirements. So we've made an attempt of places that allow us. So we've done a bit of arrangement with New Zealand workers. Australia, we're still facing issue because of this restriction.
I think this relates to the Fijian diaspora that's in the US, Australia, New Zealand. A lot of our workers are engaged with a PALM scheme in New Zealand, and likewise the seasonal worker scheme in New Zealand, and likewise the PALM scheme in Australia. So we have re-looked at it, and as the CEO had mentioned, there's a lot of complex legislation that governs superannuation overseas, which we are re-looking at in terms of prioritizing, but we are now just taking the steps to sort of deal individually with the diaspora in that respective countries. And as the CEO alluded to, we are currently working closely with, in conjunction with the Ministry of Employment, together with the New Zealand government, in getting our workers that are being sent to New Zealand to sort of see whether we can, that they be enrolled on here before they leave for New Zealand. At least whilst they are there, they can send some monies back over to feed their provident fund accounts. That's currently happening, and we are signed an agreement with one of the companies, Apollo Services, which is facilitating. Other than that, the second point is the My FNPF app. The My FNPF is used by the Fijian diaspora, Australia, New Zealand, Britain. Those that are members of the FNPF, with the comfort of their phones, they can actually use the My FNPF app in their mobile phones to do transactions or to remit funds over to the fund. That's working very well. Okay, so I thought I'd just clarify that.
Thank you. Do we have any more questions on the floor? We have a question received online. The education withdrawal only allows us to pay for immediate family members. Please, can the fund include extended family members too? Because our siblings who cannot pay for their children's fees, can the fund allow us to pay for nephew and nieces' fees?
Vinaka, that's a good question. I think I'll start with basically FNPF is really about savings for the individual member and pertaining to his or immediate family member. That's why all the assistance that the FNPF gives, whether it's for housing, under those 5 grounds of withdrawals, are confined within the specific family settings of siblings, spouses, parents. It doesn't pass on to to relatives because we also believe that the government has a lot of assistance that's available under the education system. We have recently, based on the request from members, we have recently introduced assistance to laptop assistance to uh, other assistants like laptop and professional qualifications like the FinCEA and the chartered accountants courses. But however, any courses that we support at FNPF will have to go through an accreditation process with the Fiji Higher Education and also subject to availability of members' balances. So at the end of the day, FNPF is about encouraging savings for the individual. That's why all our assistance is confined within the 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 relationships, the immediate family relationships that I've mentioned, which is spouses, siblings, parents. Yes. Hopefully, that answers the questions.
Thank you. The floor is still open for questions. Ladies and gentlemen, please take this opportunity to ask your questions. You have direct access to our CEO and our executive management. So this forum is for you. We have received another question online. What is the interest rate for 2025?
The interest that we paid last year was 8%. So in the interim interest rate is 8%. But CFO, CIO, we're tracking well, but we let us not make the interest rate that we'll declare will be dependent upon the returns that we receive from our investment. So let's not let the rabbit out of the But then when it comes to make the announcement, we will make the announcements. Huh? Yeah.
Just to add further the process thing under the law, we need to test our solvency, and that is done towards the end of the financial year, and it's done by our actuary team. Until we meet the solvency, then we'll be able to determine the interest that we can credit to the members. Right.
Thank you. Let me, whilst the question is a good one about the interest rate, let me just please ask every one of us that's listening here or by live stream. A lot of people are still not taking advantage of the interest rate that FNPF pays. 8%, you will never get that anywhere else. You look at your newspapers today, every day they will publish the rates for 1-year term deposits. Two institutions are paying 1.5% for 1-year term deposit. The highest is 1.75%. Compare that to 8%. FNPF was set up for savings and to help members grow their savings. You know, a lot of us talk about investments, doing this, doing that. But for each worker and for each member, the FFPF is there for us to use. Now, a lot of us have big dreams about investments and all of this. But whenever you want to go into any investment or anything, the foundation of it is savings. So I would encourage everyone that's listening in or that's here, if you want to get the full benefit from the FNPF, then increase your contributions or add more to FNPF. Those of us that are doing it are already seeing the benefits of it. Don't let this opportunity pass by. Don't underestimate the additional $5, $10, $15, $20 that you can save every pay, or the additional 1%. It comes to a lot. It accumulates to a lot. And please, if you do have the opportunity, come to our offices. Our officers will sit you down. There, the team is right there. They've got a retirement calculator that can actually see how much your balance would grow if you add another $5, $10, $20. A lot of us, we drink grog every week or what? We pay $5 for a bag of grog, which is $20. If you sacrifice that $20 every week, there's a lot of money that you will see that will accumulate. And it's the power of compound interest. Now, a lot of us are talking big about investments here, investments there. But please, if you are a current worker, if you are employed, the best way for you to save is to just add to your contributions whilst you're still working. And those of us that are, I see a lot of elderly members are around, encourage your grandchildren, your children to open an account. You can now open an account for children as soon as they are born. Why have we done that? We've done that because we want to encourage people to start saving from a very young age. And with the power of compound interest, that money amounts to a lot. So if you imagine, if you start saving from zero, by the time your kid is 18 years, he or she, by the time she's 18, she could even pay for her own higher education fees if she goes on to proceed to higher education. That's the whole purpose why we are doing this. So please, take advantage of the interest that FNPF is paying. And if you want to see the benefit, then please put in additional contributions. Or if you have access to a large sum of money, if you've got a sugarcane farm or you've got dollar farm, whatever farm you've got, when you've access to a large sum of money, you are now open. The law allows that. You can do a lump sum contribution towards your balance. And that's all being done to encourage members to save more. And remember, your money grows basically because of 4 reasons. One, the principal. The higher the principal that you put in, the higher the interest that you'll get in your day. The longer you put it for, the higher the return that you get. The higher the interest rate, the higher the return that you get. And please Don't withdraw because it impacts on the compounding rate. Keep that money growing and you will see the benefits of it. Good luck.
Thank you. The floor is still open for questions.
Just a question. Can a grandparent open a grandchild's account or we need the consent from the parents?
That's a very good question. For a voluntary minor member, we have a term which we call um, a primary administrator, which means that person opens the account on behalf of the minor and makes payment. Yes, a grandparent can open an account for their grandchild, but we also hope that you would also get the consent of the parent. It is not mandatory, but we prefer that you do so that and that primary administrator controls or makes decisions on that primary on that voluntary minor account until that child turns 18. So our policy allows grandparents to open a child for a grandchild, but it's just much more simpler to administer if the parent is at least aware, even though if the parent doesn't have any control over the account. Uh, we also we also have for primary administrator and a secondary administrator, which is why we encourage that when a grandparent opens a minor account, they also inform parents or a secondary administrator will have to be appointed as well.
Uh, Last week we are grandparents. We were trying to open our 6 months old grandson's account. But we were told, we went to the Provident Fund twice. We were told after we've done all the whoever to sign, and after that, when we went there, and then they told us get the parents. So at last, we have to get the parents to go and open the account. Thank you.
No, our apologies for that experience. That shouldn't happen because there are clear guidelines in terms of no, of how that process works. But we'll probably like to learn more. We'll probably try and get that. And then, Jim, where did you open the account? Here in Labasa. Okay. We will talk to you after this to get the full picture. And Timothy is here. We probably can get the full story. Right? But we want to make this though as friendly as possible and without any sort of hindrances and blockages. Minak. Our apologies again for that experience.
My name is Mr. Deo. Just on behalf of the pensioners, I request of the FNPF Management Board could print out T-shirts for the pensioners, the logo, FNPF pensioner, and the members so that it can be clearly distinguished between the time of the forum. Thank you. Thank you. The suggestion was if FNPF can print T-shirts for pensioners and for members during the forum when they visit the forum.
Thank you. Comment is noted. And our money man is there. Make sure that he will. Thank you, sir. Luck.
Thank you. We have a question in the back.
Naka, I'm 53 years old and I'm a retired teacher. And with my FNPF, I bought a land. And now, when I want to go to FNPF to pay for my credit FDB, because I got a land that secures me, and by 2 years now from now, I'll be really having my FNPF. So for that, I want to suggest FNPF to pay for my credit to FDB. Will be that can be happen?
Laka, that's thank you for that question. In terms of FNPF guidelines, what we pay for is it depends on FNPF only allows for payments of land or loans related to housing in terms of the mandated FNPFS. Also, if you are 55, we've about to turn 55, we've had a lot of people that have come in to ask for our assistance. It depends on the balances that you have in your, goes back to the general account and the preserved account. By law, we can only pay the balances out of your, if you're only allowed to use your housing eligibility once. If you had used it for a first transfer, then you are limited to your general account. So if there's sufficient balance in your general account to pay off what's left in FNPF in the FDB, provided it's for a housing or land-related loan, we are allowed to do that. But if it's not, then what we tell people, look, that's something between you and your lender, in this case FDB. Take our interim statement, show them what your age is, because by law we can also your monies are not subjected to sequestration or to sort of pay off a loan. So we are not allowed to do that under the law. So the advice that we give our people is to go to your lenders and tell them, hey, I'm about to be 55 in 1 or 2 years. I've got this debt with you. In 55 years, I will have access to 50, 60, whatever the balance is. That should be enough to pay off the loan of 30,000. And in most cases, when we do that and also we liaise with the lenders, they are amenable to giving that that dispensation to our members. But we probably can have a word after this. We can, in your particular case, we can have a look at your accounts and then give you the proper advice. Good luck.
Thank you. We have another question online. Can FNPF consider affordable housing for members to buy because properties and land is very expensive? Can FNPF consider building affordable housing
Building
for members to buy because properties and land is very expensive?
Okay.
Naka. From a from the fund's investment standpoint, the fund is actually exploring opportunity for development, as you've recently seen the presentation by the CEO with regards to a recent acquisition we've done with Fletcher Higgins, which is also a developer and build. So these discussions that we are having are not only the FNPF on a standalone, but we're working with some of the development agencies, including the ADBs and all, to explore opportunity on how we can also provide affordable homes as an aspect of an investment, but which takes in along with the member benefits that the fund currently has. So this is something that we're exploring. And again, that's a serious issue, a problem that we currently face. But be rest assured that we are looking into ways and opportunities to explore this further. Naka.
Naka? We have another question.
Hello. Just want to ask about like if a customer gets a loan from Provident Fund to build a house and then have automatic payment to go and repay the account. Like usually people just take the money out of the Provident Fund and they don't repay. But what about the repayment? You know, like if someone, not for me because I'm old, but if somebody wants to build a house and ask for loan from Provident Fund, is that happening or no?
Thank you for that question. The facility that's available from the fund is actually, no, you are withdrawing your own funds. It's not a loan. We are prohibited by law to give out a loan.
I took a loan to build my double story from Provident Fund, and then I was working in the bank. And every fortnight, automatic payment was going from my account to Provident Fund. Is that still happening now or no?
Yeah. Yeah. No, what you had the option to repay back the amount that just yeah,
Yeah.
that's right. But what's happening now is that you got that slide on, you don't. What happens is that when you come to what's happening now, when the person comes to withdraw their monies, are utilizing their their preserved account, the contributions that come in. So 10% comes in from the employer, 8% is from the employee. If you access your preserved account to purchase a land or a house, then that 80, then what happens is this. Prior to you taking out the loan, your money would come and then 30% goes into your general account, 70% goes into your preserved account. The moment we have approved, you've taken money, access your preserved account to do a housing, build a house, what happens? That $1 when it comes in doesn't get distributed 70-30. It goes, $1 goes directly into the preserved account. It does that to sort of recoup the monies that was taken from your preserved balances, to build back your balances in the preserved balance. That's done automatically. And then goes for 5 years or earlier. After 5 years, then it goes back to 30% in the general account and 70% in the preserved account.
I had to mortgage my property with Provident Fund. And after I cleared my loan, I got my title back again. That's it's not this.
That's under the old scheme now. And now when somebody comes to access their monies for housing, FNBF doesn't take a mortgage on the property or doesn't take a charge.
Because during my time they did things.
We can change that. Yeah, we're not. Yeah. In fact, we've got about 2,400 plus titles still with us, which we are trying to sort of distribute to homeowners.
Thank you. We have a question online. Is there any update on FNPF plans to invest in the north?
Thank you. As you the fund, and you've seen the size of the fund, also the fund does with regards continues to look for opportunity, be it in the north, south, or west. So just the last 2 weeks, 3 weeks, the team was here in the north, looking at a few opportunities with few other agencies, and exploring how best to look at investing here in the north. And I think that's something that's a work in progress. In fact, on the flight today, we saw some of our colleagues from another financial institution investor also on the ground, which I think is creating a lot of positive vibes in the north. So everyone's looking at opportunities to invest. And I think if the feasibility and everything stacks up, again, it's something that the fund will explore further. Naka.
Naka? We have another question received online. If a person is above 60 years, can he or she continue paying FNPF if the person owns a business? Please clarify.
Repeat the question, please.
The question again. If a person is above 60 years, can he or she continue paying FNPF if that person owns a business? Please clarify.
Well, if a person has a business and is registered himself to be an employee of the business, he can continue to be a compulsory member and pay contributions via the payroll.
Thank you.
Whilst the people are thinking about their next question, let me just two reminders, two very important forms that all members needs to update and fill. Firstly, the nomination form. What's the nomination form? The form who you nominate to receive your money. No, in the event that you pass away. A lot of us we don't think seriously about this, but that's the reality that we at FNPF face every day. In fact, a lot of people, as soon as they started employment, that was the only time that they filed in a nomination form. Later on, they started families, they became married, but they still haven't updated their nomination. And it's you putting your families and surviving family members through a very stressful time if you don't update because of the long processes that's involved from here to high court and all that, the length of time that it takes to finalize your estate. It's important for all members to update their nominations. So if you are listening in today via live stream or here, I would encourage you to update your nomination. You can go to our staff out there, they can change your nominations for you. Because if you were single when you made your nomination, you later got married, that nomination that you did initially nullifies. The marriage nullifies the nomination. So what happens is that if something happens to you, then we will have to send that money to the High Court. And we all know the long process that's involved in getting that finalized through the High Court. So I would encourage everyone to please update your nominations if you haven't updated your nominations. And the second form is a lot of people members don't realize that they can even prepare for their own funerals. There's a form which is called the Memorandum of Administration. Whilst you are alive, you can nominate someone, if something happens to you, to look after your funeral. We'll pay that person within the first 24, 48 hours. It's your monies, you decide who will take it. So in that way, you've provided for your own funeral, to start your own funeral. I know a lot of us, when somebody dies, then families are running around to see who's going to meet the funeral. And a lot of relatives usually come to the fund to try and access this funeral assistance from members' account after they die. You cannot. You can only give you that money if the person, whilst alive, had filled in that memorandum of administration form. Those two forms are readily available there. So I would encourage members and those that are listening in, please don't delay filing in, updating these two forms. It's very important. The memorandum of nomination and the memorandum of administration forms. Thank you.
Thank you. We have about 10 more minutes for questions. Any questions from the floor? We have a question received online. Members get interest added to their account every year and can access their accounts for withdrawals before retirement. What benefits can you offer pensioners? All we get is our monthly pension.
Thank you. That's a very valid question. But last year we introduced what's called a drawdown account. After that's to give pensioners and those that are intending to retire some other choices. You have the choice of having a life annuity, sole pension, life annuity, and a joint pension. Okay, a sole annuity, I'm the owner of the money. I was the one that was employed. My spouse, I've nominated her to also, but I nominated myself to be the sole. If something happens to me, uh, the money will pass on to the sole nominee for 5 years. And then after that, that stops. But if you opted for a joint pension, if I receive $500, if something happens to me, my wife will continue to receive the $500 until she passes away. Okay, she doesn't have to worry about where the cost of living comes in to look after her. That's joint life pension. And then you've got term annuities, 5, 10, 15 years. When that period expires, that's it. If you live longer, for example, if you opted for a 5-year term annuity, 55, that takes you to 60. At 60, you continue to live until 70 or 75. You'll have to find for another alternative source because that money stops when the term annuity stops. So the new product that we introduced was the drawdown account. This is after researching and also feedback from our members. What are the benefits of term annuity? The benefits of a term annuity is that you get a monthly income. You have a choice. You can have a standard monthly income, or if you want to have a higher amount, you can choose for a higher amount. If something happens to you, you have a choice. If you've got an emergency or wants to do something within the year, you can access and withdraw a lump sum, 500, 1,000, depending on whatever you want. You can have access to a partial withdrawal every year. The other one is that your balance also gets credited with the same interest that all members have. So the yearly interest that we credit to our members, which last year was 8%, all our members, the drawdown account holders, will also get that on the balance that they have left. So the money, your balances, the drawdown account will stop when your balances are depleted. But on the other hand, if something happens to you, your nominee gets the full balance of what's left in your account. And since we've introduced the drawdown account, we've seen an increase in the uptake of people that have opted for drawdown account. So to answer the question that came in online, there's this option available, which is sort of a hybrid, which caters for people. You get a monthly income. You also earn interest on the balances of your balance. You are able to draw down or lump sum each year, and then it's also tax-free. So please do make inquiries with our staff or our branches. They will fully explain to you the benefits of the drawdown account. Vinak.
Thank you. Do we have a final question from the floor? We go to our final online question. Why doesn't FNPF allow members to re-register as voluntary members after they have fully withdrawn their funds? You can only rejoin as a compulsory member. Why not as a voluntary member?
Thank you for that question. I think Millie has answered that question that came in previously. We are currently in discussions about increasing the voluntary age to probably about 60. If when that too comes about, we will then make the relevant public announcements. Vinak.
Thank you. Thank you. There's no more questions from the floor. Ladies and gentlemen, that now concludes our member forum this afternoon. Please complete your feedback forms to collect your merchandise and refreshments from our team. At this juncture, we also like to acknowledge and thank the following: Boss Communications for live streaming our forums on Facebook and YouTube, South Pacific Recordings for providing visual and sound services, and the interpreters from the Fiji Deaf Association. Before we close in prayer, we will invite our CEO to give his closing remarks.
Just want to take this time again to thank the members. I know some of you have come from afar to be here. Thank you again for attending the forum. Just to reemphasize on a number of points, you're probably aware by now that FNPF is a pension fund, so it is intended for retirement. So there are grounds for withdrawal, but the purpose is if you don't withdraw, then you'll receive the fund when you retire under 55. So if there is any message that we can drive members now is if you can save more, save now. Now our laws have been changing. We've changed the ability for children to be members from birth. So you should take advantage of that. So if you save early for your children, then they can be able to have a retirement life better than probably what we have done. So wish you well on your journey back, and see you next year. Welcome.
Thank you, CEO. We will close our forum with a word of prayer. Let's pray. Our Father in heaven, as we come before you this afternoon at the end of our forum, we would like to thank you for your guidance. Thank you for your presence throughout our discussions. We're grateful for all the information that we have shared this afternoon. We ask that you continue to bless us and keep us safe in our travels. We ask you, please forgive us our shortcomings, and we leave the rest of the afternoon's activities in your hands. And this prayer we ask in the name of our King and Savior, Jesus Christ. Amen. Thank you again, ladies and gentlemen, for joining us today. We wish you all a blessed afternoon and a safe journey home. Naka. Thank you.